Alrighty, let's go ahead and get started. Welcome everyone to the Hubb Live Trading Room. Great to be back with you all during this trading day and during trading hours. First and foremost, we do need to cover our disclosure disclaimer agreement. As always, the main thing to take away from this is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. This is always available on our website to be read in full detail at your leisure, but please feel free to take a screenshot of it now if you like. Other than that, the rally from yesterday's news is trying to continue today. So let's see what Rob has to say about that. Rob, you out there?
I am, Zach. Happy Wednesday afternoon to you. I really like having this show on Wednesdays now. And welcome everyone to the Hubb Live Trading Room. And we will get caught up here rather quickly as soon as I get the camera on what's going on. So let me give you a brief rundown of what's happened. I posted commentary on the website. Hopefully everybody's seen that on the past 2 days. I do that when there's things that occur that are noteworthy. If there's really nothing to talk about, then I don't post anything. But when things are going on, I do. So hopefully everybody checks the commentary section on the website. You should be notified when a new comment is posted. So what ended up happening was we came out of the holiday weekend. I talked about this a little bit in the EWO Trader Live session on Monday, with the market opening on the high of the day and then closing off the low, but really right on this lower trend line. And even though we tried to break to the downside, I reminded everybody of the rule that you don't jump the gun. You have to have a follow through or confirmation day. The market loves to give head fakes, and the head fakes are designed to suck in the retail traders that think, oh, we're breaking to the downside. Everybody could see this triangle formation, and then they jump on, and then the market reverses. So you need to have a little more confirmation than that move is going to continue. And that rule was personified with yesterday's move, where we opened much higher and then closed near the high of the day, which brought us right back into the middle of this triangle. We talked about this last Thursday night during Insiders. I talked about it in the U.S. Market Update on YouTube over the weekend. We reach out and touch you guys as much as we possibly can. So hopefully everybody's taking advantage of all those resources. And then after the rally yesterday, after the close, President Trump was being interviewed and said, he has no intention of firing Jerome Powell. And that on top of there was some really good earnings reports and his comments that he was going to be, quote, nice to China, and that the tariffs wouldn't be anywhere near the 145%, but they wouldn't be zero either. So you had those three things that all occurred. The fact that he's not interested in firing Chairman Powell. Earnings reports came in better than expected. And then on top of that, the China issue, which I don't know that that was that big a one, but yeah, all three things that combined in the futures took off. When they opened back up at 6 p.m., they opened up about 100 points. We opened there, as you can see. We did trade a little bit higher, but I'm going to bring on the moving averages here, and you can see on the 10-day moving average on the high of the day, we hit the 30-day moving average. So just as a reminder, I had a couple comments asking, what moving averages do you have? And I know that we had new people all the time. Forgive me if you're a long-term subscriber and you get these repeated messages, but please understand that there are newer people that haven't heard this 1,000 times like you have, and we try to keep them up to date as well. But that fuchsia colored line is the 30-day moving average. The lime colored line is the 10-day moving average, and the royal blue line is the 50-day moving average. Most people view, pretty common viewpoint, that the 50-day moving average is the trending indicator. But what I was taught years ago, made a lot of friends in Chicago and New York in my early days of trading and traveling around doing educations, that the floor traders watch these 1030 crosses, and they watch them as a potential early indication of a trend change. So although the 50-day moving average is the trending moving average, if you get a cross between the 10 and the 30, whether it's to the upside or the downside, it can give you an indication of where that 50-day moving average may go. So that's how that plays out. And then we have the rule, you know the rule by now, that no security name time frame gets too far from its 10-day moving average, at least not for long. And we got oversold a couple weeks ago, right back up to the 10-day moving average. I mean, these rules work. I hope you're paying attention to them. I know we've had a lot of traders that have moved on. They were alert subscribers and they learned, they educated themselves. We got several of you out there now that are doing the same thing. Gosh, when I see the questions and comments from some of you from when you first started to where you are now, you can see the educational process clicking, and that's really what Ewo Trader is about. I know this is the Hub show, but that's what we're here to do. Is we're here to educate you, and the alert service is designed to enhance that with actual examples. So when we look at these moving averages, the 30-day moving average I don't view as a strong support resistance average. It's simply there for the early indication of what may happen with the 50-day moving average. So my point is, even though the high of the day touched the 30-day moving average today, I don't view that as, oh, it moved down because that's a resistance point. We have the rules around the 10-day moving average. We watch the 50-day moving average for the more intermediate trending indicator. The 30-day I don't view as much of a support resistance level. So I think that's just a coincidence. We just got a little bit too far away from the 10-day moving average, but notice the 10-day moving average is curling up. I'd commented that the 10 and 30, or excuse me, the 10 and 50 had split a little bit. That's another rule. That the 10-day moving average and the 50-day moving average don't diverge too much for too long. And so all of these things, all these rules that we talk about are really being exemplified with what's been going on in the market. And boy, is the market crazy. I actually got a text message this morning from a friend of mine in Australia. He's saying, how are we supposed to trade these markets when some sort of a massive news event comes out seemingly daily to whipsaw the market? And that's what occurs when you go through a consolidation phase like this, is there's a lot of whipsaws. I would have loved to have put out a strangle on the SPY with the size of this triangle, but the problem is with the VIX trading up, it has just recently dropped below 30, but it was above 30 about 30 minutes ago. The cost of the strangle was just way prohibitive. As just there's If we were to do a strangle on the SPY, first of all, it would have been very expensive. And in order to make it stay within our $500 risk limit, we would have had to go so far out of the money, it defeats the delta gamma acceleration formula that we utilize for strangles. It would have taken too long for it to move, and you set yourself up for just getting wiped out if there is a upward move and the VIX tanks back down. So it would have to move a long ways, but even if it was moving a long ways, if that move happened to be the upside, all that volatility would come out and you'd still lose. Unless there was a massive move in a short period of time to where the call option moved in the money. So it just wasn't feasible to do it. If you're wondering, why didn't we do a strangle on the market itself? Cost prohibitive. It's just not available. So we'll watch and see. And now we're going to look in the opposite direction, which is the commentary that I posted early this morning before the market opened on the fact that, well, we thought we might be breaking to the downside, no follow through day. Now we may be breaking to the upside, but we still have to have the follow through day. So all the rules still apply. So you just wait, patient. We'll have plenty of opportunity to trade directionally once the market breaks out. This is a large triangle here. So from 550 down to 475, that's 75 points on the S&P or 750 points on the SPX. So we're going to get a big move. We have plenty of time to capture it. But it was a perfect illustration. If you had jumped in on Monday to the downside thinking that, oh, we're breaking lower. Here we go. Continue to the downside. You just got destroyed in the past 2 days. So the rules are in place for a reason. The most major benefit that I can provide from being around over 28 years, really doing nothing but trading, playing some golf as well, is experience. And that's it. I can explain the rules to you, go through. The markets are always changing. The bond market, the dollar have both been doing some things I've never seen before. And that's one of the fun things about trading, even though you've been around for a while, is you always see things that are like, wow, never seen that before. So it constantly keeps you engaged in the markets. That's why I love doing this. But you have to be disciplined enough to follow the rules. We give you these rules for a reason. So now we'll look and see, where do we close today? Likely we'll close outside the upper trend line there. Today's movement in the markets have been very similar to yesterday, where we did have a sell-off attempt. Yesterday it was at 1 p.m., right when we came on for Trade Finder Live. The market was at its high, and then it had a big selling attempt. The sellers tried to step in, push the market down quite a bit. Basically took away half of the rally yesterday, so corrected about 50%, and then buying came in into the close. And again, you can see that we closed near the high of the day. That happened earlier today. The exact time that we started getting the selling was at 10:45 Eastern time. So again, the sellers stepped in, but remember, we already had the futures way up. Even though it looked like, oh, wow, the whole thing's falling apart if you just looked at the chart, but no, not so much. We really didn't get much below being up 100 points on the E-mini futures, and we're now up 120 at this point. So that selling attempt is being bought into. We'll wait and see where we close today. The closing price is the most important. If people are wondering why, it's because that's when the professional traders trade. They trade in the last hour with a lot of orders at the close. So whether or not they're buying a block, selling a block, whatever they're doing, they oftentimes will either trade in the last hour or do it on the close. And whether or not it's in the last hour or closing orders, the closing price is so important. And that's why we focus on that. When you hear me say numerous times, let's see where we close. So I would be very surprised if we fall back into this and give away a lot of it, but that could happen. A lot of time between now and 4 p.m. Eastern time, but it looks like we're going to try an upside breakout. Then the same rules apply. Do we get a follow-through day tomorrow? And if not, all we're going to do is expand this triangle and make it larger if we aren't able to close outside that line. But for now, we'll just continue to keep this triangle in this kind of a mode, and we'll look to see what happens into the close, and then whether or not we get the follow-through day tomorrow. I've mentioned this before with the triangles. I'm really good at triangles. That's how I made my claim to fame in the world of options trading, is not just trading triangles, but having that unique formation of a strangle to take advantage of the breakouts. I can tell you that there is no such thing as two false breakouts. So if this was a false breakout to the upside, and this turns out to be a false break, or to the downside, and this turns out to be a false breakout to the upside, that doesn't happen. That just means there's a larger triangle being formed. You would have gotten whipsawed on both sides if we reverse this tomorrow. Patience, patience, grasshopper. We will wait and see once we get the definitive breakout move. And as I said earlier, with the width of this triangle, the move is going to be substantial, and the markets will have plenty of time to trade that directionally. I wish we could have done a strangle on the SPY, but again, the cost was just too high. The risk is too high. that kind of catches you up on what's going on with the markets. It was President Trump's commentary, as well as some really good earnings reports. And I know y'all, uh, if you haven't, weren't attending live at the Earnings Alchemy event last night. Hopefully, you'll watch the recording where they talked about Tesla earnings. They actually missed, but Elon said that he's going to be wrapping up his duties with Doge fairly soon and focusing on running the business of Tesla. Tesla liked that, even though the earnings weren't so good, but everybody knew that they were going to miss on earnings with everything going on. But that put a bid underneath Tesla as well. Don't want to talk too much more about that, but that happened after hours as well. So we had all kinds of things going on after hours that just rocketed the futures once the futures market opened back up again at 6 p.m. Eastern time. So that's a pretty brief rundown on what's going on here. A couple more things, and then we'll get to the AI side of things. I did want to show you the bond market because I had made commentary that the bond market was acting squirrely again, and it was on Monday. You can see this downward move, but once again, no follow through. That's the key. But this looked a little scary with prices moving down and yields and rates moving up. This is TLT, the 20-year, and we kind of recovered that a little bit yesterday, finished with prices a little bit better than where they were, at least on the close on Monday. So rates moving down just a little, not as much as they were at one point, but better. But look today, much better on the rates. So if rates continue to move down, and then President Trump backing off of I talked about this in last Thursday night's insiders meeting. President Trump doesn't have the power to fire Chairman Powell, and maybe that was made clear to him, and that's why he backed off and just said, I wish he'd start cutting rates. I'm sure he does. And I mentioned, I think during Trade Finder yesterday, Zach, you can correct me if I'm wrong, but Christine Lagarde from the ECB, the head of the ECB, that's the Europe's version of the Federal Reserve, has been aggressively cutting rates, and she left it open to cut again, said it's going to be data dependent. They're just going to look at the data and make their decisions month after month. I'm sure President Trump wishes that the Fed was following that plan, but the Fed seems to be a little more cautious here. And he was, as I wish the Fed would cut rates and cut them now. And obviously, the market loves that. You can tell by the chart if you watched Trade Finder yesterday of the EWG that we show in Germany. All equities markets love lower interest rates. And if the Fed does cut rates, and they will at some point, just depends on when, we will probably see a rally at that point in time. And perhaps the bond market, even though it gave us a little bit of a head fake on Monday, is starting to say, yeah, we do think that the Fed is closer to cutting rates than maybe some people think. I guess May might still be on the table, the May meeting. It's gone way down in the Fed fund futures. They're looking more towards June, but we'll see. Maybe the Fed surprises people, but also opined on with the administration's rhetoric and criticism and all the negativity towards Chairman Powell. If he were to cut it May, wouldn't it just look like he was succumbing to the pressure and they're independent and they don't want to be viewed that way? They don't want to feel like they're being bullied into doing anything they don't want to do. So I almost feel like that harsh rhetoric was counterintuitive towards getting what they want, which is the Fed cutting rates. But the calmer, more polite comments from President Trump last night on, I'm not going to fire Chairman Powell, have no interest in doing that. I just wish he would start cutting rates. That probably would have been a better way to attack things from the beginning. So anyway, that's commentary there. I also wanted to look at the dollar real quick. So if we take a look at the dollar, we really need to get that dollar back above 100 before I feel comfortable. We don't want to lose the dollar. moving down can be viewed as a positive thing for technology and the IWM specifically, but we don't want it to go so low that it shows that foreign countries are dumping dollars. I think China and Japan made their point when they were selling some treasuries off. They can't afford to dump all of them and crash the U.S. economy, which, make no mistake, they could. Yeah, they hold so much of our debt. If they sold it all off, they could send rates into the stratosphere and really, really hurt the U.S. economy. But that's not in their best interest. Not in their best interest to do that, because if they did, then um, the consumers would stop spending, and we are the consumer consumption engine of the planet, and everybody wants to sell their goods here. So there's no reason for them to do that. They were just, I think, shots across the bow kind of thing. And that's what goes on in negotiations. You know, people flex their muscles, they flex their um, leverage that they have on certain things, but it's not in their best interest to do that. So I just don't see why they would. But as long as the dollar is hanging around here in limbo, it is subject to potentially going lower, and that could change everything in the narrative. If the dollar starts to collapse and rates start ticking back up significantly, then we could have some real problems. So we still need to keep an eye on the dollar. You know, my Goldilocks scenario, I'd like to see it trade between 100 and 104. That's asking a lot, I know, and may not get that, but that would be for me where the sweet spot is, where it's not so high that it's hurting companies through the exchange rate that trade internationally, but it's not so weak that it starts to lose confidence with other countries that hold so many of our dollars. So let's go ahead and take a look at the AI. That's why you're here. And we take a look at today's bullish results. You can see we have HDEF. And you know, I like to look at these with you on Wednesdays during the Hub show. And this is ETF for high dividend yields. It's interesting that I don't know how liquid this is, but let's see if there's even any options on this. Um, yeah, and no open interest whatsoever, which makes sense because people just don't care about dividends anymore. There was a time when owning a stock and collecting the dividend, that was your way to generate income off owning stock. But when stocks started going crazy and the market started building and you get these big moves out of the stock, you gain way more from trading stock or derivatives, options on stock, which gives you even better leverage than you do on collecting dividends. And just as a reminder, when a company pays a dividend, the stock price is reduced by the amount of the dividend. So it's not just free money that comes out. They just are basically giving you money in advance of the stock price or expected to move higher. So it does give you a little bit of confidence that if the company's paying a dividend and hasn't cut it, that they're still in good financial shape. So from that standpoint, that's why I look at dividends, just to see what the company themselves think of where they sit financially. But you know, there's just not anywhere near the interest in buying stocks with dividends as there was, say, 30 years ago when that was the big thing. I remember back at my golf pro days, there was a member there. I always talked about him because he drank like a fish, smoked like a fiend, 82 years old, still played golf 5 days a week. It just defies all medical stuff that you hear about. But he owned a ton of Ford stock, and you know, it's trading at $9, $10 a share, and everybody would give him a hard time. Why don't you sell all that Ford stock and go buy something that can appreciate in price? But he had so much of it because his career had been 30 plus years. I think it was 35 years with Ford. He had so much stock that the dividend that Ford paid was what he lived on. So he didn't touch the shares. He just lived on the dividends. So, you know, that's how things used to be a long time ago. but it's not like that anymore. So I don't really have a whole lot of interest in this. The score's not high enough, but it's close. It's nice to see scores getting back up in the high 60s at least. And then SXT is right in the middle. So it's not high enough to try to go forward with this, even though it sure looks like it does want to go up and hit that AI target. But right now we're overbought from the 10-day moving average, so you wouldn't want to jump in right now anyway. But certainly something to keep an eye on as far as where it may move, but not from a trading standpoint, not putting money at risk, just a curiosity type thing. If we look at the bearish search, again, nothing high enough or low enough. Remember the fade trades. If you have something that's a very low score, you go the opposite direction. That's below 25. So we're right in the middle there. So not a whole lot from that standpoint either. But one thing that I wanted to show you, which is really cool, is check this out. I think this is going to be the place to be, as we mentioned, that they're about to, if they haven't already. I know we're in beta right now. I don't know what the official date is from Hubb for sending these signals out to everybody. Maybe they have already, but to see all of these signals on the wave 5 bullish side of things, you look at this one. I actually was looking at this one earlier, so I did cheat on this one because I was curious to see. It's new. It's the new shiny thing, right? So score's only 50%, but when you look at it, is United Bank shares. The financials started off the earnings season much better than people feared they might be. And the fact that we may be looking for rate cuts could be very beneficial to the banking stocks and the whole financial sector as a whole. Too bad the score is not a little bit higher, but you can see the potential here and think about the timing. We've just had this big move down. If the low's in, and we could still test that low, we could still break out of that triangle to the downside and test the low. We're not out of the water yet, or out of the woods, or whatever. But these will certainly be really interesting to find these wave 5 trades that are ready to go back up towards their previous fours with the fact that we had that big downward move and a lot of wave 5s to the downside completed. So the timing on the release of the AI giving us these wave 5 scores, I think, is phenomenal. I think we're going to see a lot of activity really quickly, almost today. We saw some, and then a couple others just to give you again the idea. Just previewing this is what I really wanted to do in this session. You can see that the wave 5 down there didn't go to 100%, so this should go all the way back up to the previous 4. Unfortunately, the AI score isn't quite high enough. I think Brinks may have some liquidity in its options. Let's take a look. I could be wrong. A little bit, not as much as I thought, though. There's some contracts there, but not as much as I thought we might get out of that for a company that's been around so long. But you can see the gap up today and the potential to move higher is just really exciting. I think you may see several of these in the next few days, depending on what the market does. With all the downside patterns that may have completed, not just from the low of the trading, but the downward move in the market. So we go through and look at these and you think, wow, these are really enticing to look for with these potential moves back up from the wave 5 side of things. So it's just going to add a whole lot more activity. The AI impulse strategy has been very quiet recently. The score's just not quite high enough. But this wave 5 edition, again, coming in with the timing is going to be really interesting to see how many results we can get with scores high enough to send out trades. Isn't that going to be fun when we send out the first alert on a wave 5 trade? Then let's go down to the low side here. And I thought I'd make some commentary here if you're curious of, well, what does this mean when we have these wave fives? What's the fade trade on a wave five trade? So when you look at this, with a low score here below 25, the likelihood is not that it's going to go up and hit its target price right here above where the previous four was. Does that mean it's going to continue to go down? Not necessarily. What's likely to happen is kind of range bound. So more of like the time strategy type trades here. In other words, it's not ready to just turn and run back to its previous four, but it doesn't necessarily mean, oh, you're going lower and the wave five isn't done yet. Every situation will be viewed and analyzed on its own merit. But I just wanted to make some commentary there that what we could look for is some nice calendar spreads. Think about this with the VIX being elevated, and hopefully it doesn't stay there because that would be bad for the markets. But as far as moving higher, but if the VIX does calm down a little bit, there is still added implied volatility from a big downside move. So it's an ideal scenario, very similar to what we look at in the time strategy, where you have a big drop that spikes the implied volatility. That's a real quick event. But same thing here with this movement to the downside. IV is elevated. And if it's not going to make its move back up here and going to stay more range bound, then we have the opportunity to take advantage of that from perhaps a calendar spread, etc. Now, there may be some that the wave five isn't done yet and they could move lower. But when this wave five is colored a solid purple like that, the wave five is confirmed. And I think we could get some short-term calendar spreads rather than like the time strategy where we're waiting for a bit for it to go sideways. Maybe we could find some shorter term ones here on these wave five bullish results that are too low in the scoring. So let's just take a look at a few of them and see what it looks like. You can see some of these have moved up off their highs. Sellers are trying to step in again here on that last little bounce up. We'll see if they're able to hold that, but the market's had a heck of a rally the past 2 days. So just, we're still up 108, even though it looks like the market's selling off hard. So you look at this and trading down near the low of the day with a 19% score. The likelihood is that, and if you're wondering, okay, well, where would you put a calendar spread? That would be a great question. Where would you put it on something like this? You're going to look for support resistance as far as maybe we churn here a bit. Remember, when a wave five ends, you go into a flat, zigzag, or triangle. And so forming a triangle or forming a flat. So two of the three would be ideal scenarios for a calendar spread. The one that could work on a move back up to the previous four would be a zigzag. That's what would normally happen. You'd form a zigzag back up to the previous four. That's the least likely when you have a very low score here. But a flat or a triangle formation pattern, the consolidation would be really ideal. So hopefully we see some of those results come out in the very near future. And here's another one here, Reynolds Consumer Products. I think this is the Reynolds aluminum, I think, but I may be wrong there. Look, this is what I'm talking about here. See, well, this was kind of on that big selling day. It succumbed to that, but it came back up here. So my expectation would be that we're going to stay right through here for a ways. So pretty excited to look for some potential calendar spreads off these low scores. So that's the fade trade off the wave five bullish. I don't think I've talked about that before. I think this is the very first time I've brought that up. So exciting things to look forward to moving forward with these AI signals. So with that, Zach, we've got just a few minutes left. If there's any questions, I'm happy to take them now, or we can just get back to the trading day. But I always try, even when there's not any actionable symbols, to give some sort of a tip on utilizing the Hubb platform and the AI signals. So I thought showing, well, what can we do on the fade side of these wave 5 bullish signals would be helpful.
Absolutely. I think that was a very insightful presentation. And we do have some questions, so I'll get them through to you with the time remaining. Question from Jay and OKTA.
Yeah, I like this one too. I don't know if Jay's the one that asked about it before, but um, we had alerts both ways on this that did well, and I feel like that holding that low at 90 was really important. The fact that we're having resistance at 100. You hear Jeff and I talk about these round numbers all the time. And the last time we looked at this, we talked about it right there. There's resistance, not just because of the big 100 round number, but that was resistance back in February as well. Came back down, held 90, did break above it, but couldn't hold it in the selling, but held 90 and jumped back up. Couldn't hold above 100. No follow through day there. Um, we broke up, but none of those days gave us a follow through day. So back down. Now we're trying again. So I do think this is one thing. I have this one on my watch list as well because now that my favorite LA Wave stock, Google, is embroiled in all kinds of litigation, it's really hard to try to look at that for any sort of trade. But OKTA has been up in the upper percentages of stocks that have performed well with LA wave patterns, et cetera. But we got to get above 100. If we can get above 100 with follow through, look how much room we have. We'll probably move to 120 rather quickly. And that would be a nice potential trade there. But let's not jump the gun. You can see what happens. We try to get above 100 and it gets turned back. This one did have a follow through day, did go a little higher, not a whole lot, but did go a little higher before it came back down. But we may be moving into a different market now as we're getting closer to Fed rate cuts, et cetera. Let's see where we close today. Let's see if we can get back above 100 and look to have some follow through. And then I think you have a pretty good bullish trade there. The wave 4 holding right around the 61.8% level. That wave 5, look where the wave 5 is if you want to get excited about something. I totally understand why you're asking about this stock. The tap box is way up here. Even the lower end of the tap box kind of coincides with the wave 3. And if we're going to have a wave 5, we got to take out that 3. So you would expect us to be somewhere at least in the midpoint of the tap box. So I think this is a great potential trade in the making. It's not there yet, but let's keep a close eye on it. Thanks for asking about it.
Absolutely. Question for Maria. What futures do you look at? Are they on Hub?
I look at the E-mini futures. We don't have the futures on the Hub platform right now. Hope to have those at some point down the road. But whatever broker platform uses probably has the futures quote on there. But I look at the E-minis /ES, and then you put in the whatever quarterly expiration and the year. So right now, the symbol is ESM25 are the futures that I look at. So the E-mini futures is, to answer your question, Maria, are the futures that I look at. So
Thanks, Rob. Penny says, thanks, Rob, for going over the moving averages again. Can you cover what the blue box means? And if I think I can add that that is the optimal range to enter or for entry for a signal. Is that correct?
yes, so going back to the wave 5 bullish, I'm glad people are interested in this. So yeah, that gives you an entry target range, if you will. It's almost like a mini fail zone type thing. Like if it's lower than here, maybe that's not a good entry. And if it moves too high, you'd have to make the determination at that point, is it too far gone to enter? In this case, you'd say no, but the score's not high enough. But if it was, but yeah, that's what that's designed for. So it's an added feature that the Horbert, gosh, trying to talk too fast to get in, but Hub organization added in with those new AI signals.
Thanks, Rob. Question from Sean. Say for doing a calendar spread on DFH, what is the best ADX, lower mid, and CCI? I think the more neutral on all signals, the better.
Couldn't agree with you more. I think that's a great You can never, I shouldn't say that because some people get so carried away with technical indicators. I've seen people that have so many indicators on their charts. It's like, how can you even see what the pattern is? And you're never going to get all of those to agree. What you need is a trading system with indicators that complement each other. Just as a quick reminder, we look at the DMI because the ADX is so good at telling you the strength of a trend. And then the positive and negative directional indicators tell you who's in control, buyers or sellers. But it's a little bit of a lagging indicator. So we look at the CCI, which is very responsive to day-to-day movements. And then kind of moving a little bit towards the fundamental side, the CMF on what's going on, where's the big money moving. So that kind of covers all bases on top of moving averages and Elliott wave. All these are designed to complement Elliott wave. Elliott wave's number one, in my opinion, and all these things are just designed to complement them. So I'm sorry, what was the symbol that you asked about?
No worries. That was DFH.
DFH. Oh, there we are, right there on the fade trade. So um, remind me of the question. Sorry, I got off on a tangent and forgot everything you said.
No problem. It says, say for doing a calendar spread, what is the best ADX, lower mid, and CCI? I would think the more neutral on all signals, the better.
Okay, yeah. So if we take a look at the ADX, it's moving down. Now remember, you're not going to have this is not going to be like a triangle. You're not going to have the very low ADX because that implies consolidation. This is completing a wave five pattern to the downside. So you're going to have a higher ADX. And so in this case, the ADX being up around 20 or so is what you want. Because if we're going to put on a calendar spread, we want to be able to have a time when the ADX is coming back down and see how that ADX is dropping. Even though the positive directional indicator crossed above it, that's what the AI is telling us. They don't trust that with a 19 score. And the ADX coming down is not confirming that move either. So it's a little different. It's a great question because it's a little different than the way we look at the ADX. Normally, you want to have some room now for it to move back down towards 15. So I would say somewhere in the 20 area. I don't think you want it too much higher than that. If it was above 25, then perhaps the downward move isn't over. So we're looking for the Goldilocks area here, the sweet spot. So I would say in the 20 to 25 range on the ADX to give us enough room for the ADX to come back down towards 15, which would imply the stock's going sideways, which is what we want for the calendar spread. Now, in this case, where it's kind of the exact opposite, when you're looking at the CCI, because it's so day-to-day responsive, I don't know that this is going to be as helpful for a calendar spread on a low score on a wave five bullish trade because it's going to be all over the place. You can see the CCI rarely just sits still. It just doesn't do that. It's always moving. And that's why it's so complementary to the DMI and the ADX, where they're lagging and take a little longer to occur. This is so fast. So if I had to come up with a scenario on the CCI, I would say that when you have a spike like this, that would be good. It would probably be better if it was at an extreme point because what we want is for it to work back down towards zero. So the ideal scenario for a calendar would be for the CCI to be in a position where it would work back down towards the zero line. That would imply consolidation as well, or more of a sideways movement. The extreme point highs might give you a little bit more room there. for a movement back down to zero. But that in general would be what we're looking for. But I would look more towards the ADX than the CCI. But if you really wanted to look at that, that's what you want. You want it in a position where it could work back down towards zero. So that would imply being above the 100 or below the negative 100 levels to indicate some sideways movement.
Alrighty. Thanks, Rob. Just a few minutes after time, and that covers all the questions. So thanks for an insightful
Awesome.
session. We'll let everyone get back to the markets.
Sounds good. Thanks, everybody. I hope you found that informative, and let's see where we close today. Have a great rest of your afternoon. Look forward to talking again soon. Take care, everybody.